Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to do a bit of a strategy session. We're going to talk about Mario Singh's Pendulum strategy. It's a fantastic way to trade flat markets. It's one of my, I would say, one of my favorite price action strategies. It's easy to use. I'm going to walk you through exactly how to do it. We've got big breaking news, though, that we're going to have to cover, and we're also going to take a look at a few of the market, sort of the market things that I'm looking at, and we're going to start off with that. We're going to put out a trade idea based on the Euro-US dollar again today. I'm going to put that out probably in about the next hour or so. It's already been written up. We're going to look at WTI crude oil. We've got to look at gold because there's a lot going on in the world right now, and it's not good news. Things are definitely changing. So I want to welcome everybody back. Team Marina, good to see you. Hey, everybody. We got the normal crew, it looks like. Dibble, good to see you. Dibble, Bobby, Bob, Mark Corp, always a pleasure, guys. All right, let's just sort of hop right into this breaking news. This stuff is pretty alarming. This news broke yesterday, and there's been all sorts of accusations flying in the Russia-Ukraine situation, and that's something that can really impact the markets in a big way. And right here you can see Russia says Ukraine attacked it using U.S. long-range missiles, signals it's ready for a nuclear response. And then also Putin made the news yesterday by lowering the traditional threshold for a nuclear retaliation. Now, I don't necessarily believe that you're going to see anything on the nuclear front. Understand that is the end of the world. Once somebody touches off one of those things, it's over. Everything that's been war game tells us that it goes to complete escalation. There's no such thing as a limited nuclear war. And I'll tell you right now, the markets aren't really respecting this story the way that I thought they may. But you're seeing some action in gold. You're seeing bullish action in gold. So always remember, anything to do with geopolitics, anything to do with war escalation, it boosts gold. So right here, you can see your daily gold chart. You've got really a nice big break. David Forty, good to see you, David. You got a nice big break yesterday. This is completely on the Russia-Ukraine news and I guess I would say the escalation. I mean, that's a complete escalation. Long-range missiles hitting inside of Russia is definitely an escalation, and that's something that we've been watching for a long time here on the live streams. I didn't think that it was going to start happening, especially this close to the end of the Biden administration, and all those folks in the United States that, a lot of the folks in the government, they're going to be fired, and they're going to be fired relatively soon. We know that there's going to be a tremendous turnover coming with the new Trump administration, and a lot of folks that sort of supported the long-range missiles and all the cash flow and everything going into the Ukraine, that's going to become quickly a thing of the past. Now, what we have to do now is say, okay, what's going to happen to our markets? Gold, it really shows you the sensitivity here, and really I would say, I won't say prudence, because I don't necessarily know that you buy gold and hold it right now with the dollar is going up as much as it is. But anything on the geopolitical front that shakes up the market brings bidders to gold. That's the way it is. So if you're holding shorts on gold, I said, we talked about how risky that could really be. And what do you have right here? Nice big move. You got a compression, a real tight inside day on Friday, a real slow day for gold. And then you got the big breakout, that inside candle. You got the big breakout on the Russia-Ukraine news. Yesterday, we saw about a 2% rally, 1.9%. And then today, it's been more of the same, up about 0.6%. So if I'm going to trade this thing and I want to scalp it, I do like this level up here, the back end of our golden zone, our Fibonacci golden zone between 50 and 62%. So somewhere right up there around 26.44. That could be a pretty darn good short. But just remember, we don't necessarily want to commit to holding a position. So I highly recommend getting in and out. Get in there, get what you're going to get, and then move on. So if you're going to sell right up there, it's not a bad location. It's not bad trade location, but you don't want to be just sort of waiting around thinking that may be the top of the market, because you're one headline away from seeing gold absolutely explode. I still believe that you're going to 3,000. I'm on the record. I'm sort of on the record in a big way talking about that 3,000 level, and I do believe that you're going to see that potentially by the end of the year. And if, in fact, you see a major escalation on the Russia-Ukraine front, you could see that. You could see 3,000 as early as the end of the week. I mean, you really could. So very volatile situation here with gold. Now, as far as trading it, like I said, you could take a short up there right around 26.44, somewhere in that neighborhood. I like 26.75 better. That's 78% daily retracement. You'll notice that area is just sort of a natural supply zone, meaning you got your order block right here where you had a nice big sell-off, a lot of sellers in there, rebound, compression break. Okay, that's pretty much just a bearish breakout there. So we want to get with that price action. I would much rather do it up there at 26.74 just because that 26 and 3/4 level, that's a pretty darn good psychological level, and we could get in there and get after it. So let me see. We got some new names in here. Tambo Oliver, good to see you. Tambo, Clive Harrison, good to see you guys. If you have any questions at all or anything you want me to cover, just go ahead and drop it in the chat, the chat on YouTube or the live chat here in the trading room. I'll be more than happy to cover really any market you want to look at today. There's a couple things we want to do, though, and get accomplished, and we got to talk pendulum, but we're going to do that in just a second. This is a trade idea that we're going to put out here relatively soon, and it's on the Euro USD. I got a question yesterday about the Euro USD. Shane, how low can the Euro USD go? And big picture, when we're looking at what's happening here, it's been a very bearish 2 months. Now, a lot of that has to do with your election, U.S. election, really the pivot from the Fed wanting to really slash interest rates in a big way towards being more conservative with those rate cuts. So monetary policy's changed. We also believe that the Trump tariffs and the new economic or fiscal policy that's coming into the government is also going to have an impact on the U.S. dollar, potentially sending it higher. Now, right now, you've seen really the Euro USD has absolutely fallen out of bed in the last 2 months from up around 112 down there to right around 105. So I got this question. It's a good question. Shane, how low is the Euro USD going to go? I'm not a magician. I'm not a wizard. I don't have a crystal ball. There's a million things that can happen to price action to prop this thing up or down. Right now, I believe that the fundamental outlook is going to be bearish. And the reason why is you're going to see some tariffs come into play during Q1 2025. Those tariffs may potentially bring a little bit of pressure to pricing here in the United States, at least in the short term. I don't believe that's going to last. I think people are wrong about that, but I do believe that you're going to see a bit of pricing pressure. And what that can do is that can make the Fed pivot off of those rate cuts that we were promised all year long, and that could really bring some more heat to the dollar, meaning the Euro US dollar could be in a position to crash. So I'm looking at this relatively from a long-term perspective. Markets have memories. That right there is 2023's low, right around 104.48. I love that buy. I think that's a fantastic buy, and more than likely that's going to be the trade idea that I put out here a little bit later today. We also wanted to sell. Remember, we had a daily chart that was giving us a pretty good selling opportunity as well. And I think that you want to be short here at least until you get down to 2023's lows, and something like this. This is one of those trades that I really liked. I think we got a good chance here to get in there and maybe make a little bit of money. So we're looking at 106.64 to the short, probably about 25 pips, something like that. You can put your stop loss up at 106.79. You could take that shot for maybe 15 pips, 20 pips, or you could go a little bit longer, maybe go up to 107.09 with your stop loss and look to grab 40 pips. That's completely up to you. It depends on what kind of trade you want to make. But I do like this bearish market structure. I have no problem stepping up and selling from these Fibonacci levels. But 2023's low, that's going to be an area of support. It's an area of natural support, 104.50. That's probably going to be a pretty good area for us to dig in and really see exactly what this market wants to do. It's going to be a fantastic zone. It's going to have heavy two-way action. So once again, I'm going to put something out here in the trading room a little bit later today, probably about another hour and a half. But par value, to me, the market always has a memory. In a number like par value, it doesn't get any bigger and rounder than 1. It just doesn't. So when we start thinking about, okay, if we're in a repricing mode here for the Euro USD, it makes sense that we would go down and maybe check out a par value. And listen, we were trading down there not too long ago. Take a look at this. This was back in 2022 when we really were going through that tightening to try to get control of that post-COVID inflation, which I argue has not been done yet. That's a pretty good bid. You can bid that level there. Par value, I think there's a lot of big money that they're taking positions, and they expect to see the Euro USD fall away here in the next, I would say, 6 weeks or 8 weeks. I don't dispute that. I think we go down there. And then lastly, 2022's low would be the absolute bottom of this thing, in my view, 95.35. That's a tremendous zone. I don't think we get down there, but if we do, that would be a fantastic bid as well. So that's sort of a game plan for me looking at the Euro USD for the next several months. I want to sell until we get down to 104.48-ish, 104.50. I want to see what happens there. Then maybe we sell again on a breakout beneath that zone, but you definitely can trade that thing to the long side as well. So you definitely want to do that. I think that's going to be a pretty good trade as well. All right, U.S. oil. I was asked earlier today about U.S. oil. I'm more than happy to go over this stuff really and look at whatever markets you guys want. I've been sort of an outspoken I won't say critic, but I've been really outspoken about the long-term market dynamics of crude oil and really saying that there's a lot to be said for the bearish side of this market now. There really is. Now, we're not really moving. We're not really moving right there. We had really a tight month, that election month, October, the lead up to the election. Whipsaw. It really had to do with poll numbers. If Harris was going to win, we were looking for a big bullish run. If Trump was going to win, we were looking for a big bearish run. I think we're in a position here to finally see our bearish trade come to fruition. And what I would be looking for right now, that 64.79 to 64.50 zone. Don't forget where that is. Remember, markets have memories. Shane, why are you working this from negative 40 down there? Because that was the true price of WTI crude after COVID. All right, I'm not going to dwell on that. I talk a lot about that. But let's see if we can find maybe an intraday trade or a short-term trade. Let's go down to our daily. Now, we know our key support levels right down here. We know that's there. That's definitely going to be a bid, 64.75 to 64.50. I have no problem with that. You could even bid 65 if you wanted. We had a nice spike low right there, 65 and 65.29 back on the 10th of September. That was a fantastic trade. So this area is very, very interesting. So if we wanted to trade right now, do I want to be bullish or bearish? I still want to be short, but let's not make it. Let's not get it twisted here. This right here is a major sell-off. Then you've got compression, and now you're looking to rotate higher from here. It's very difficult market structure to pick a direction. I don't want to be long WTI crude, but believe me, Russia, Ukraine, if in fact that kicks off even more, you're going to see big time pressure to the top side on commodities. Gold's already up. Look at silver today. Silver's sort of holding in there flat, but back above 31. You've also got a big time rally in natural gas. That shouldn't surprise anybody. 3%. So that's a bullish market driver. Any type of geopolitical angst is going to spike these commodity markets. The real question for me is, do I want to be long or short crude? I want to be short. I think it's a pretty darn good trade. Excuse me, it is really cold and dry here. I'm in Dillon, Montana, so my nose is definitely itchy. Sort of fighting a little cold as well, but the air is so dry. It's very cold here today. In any case, do I want to sell this WTI or buy it? Right now, I want to sell it. But I'm not just going to sell it at market. I've got to get decent trade location. And right now, it's going to be a challenge to get decent trade location. Take a look at what's going on here. This is just absolute chaos. You sort of had an inverted hammer. There's a big sell-off, and now we're retracing back into that range. And I think that we're probably going to get a selling opportunity, but it's not going to be a clean one. So when I put this idea out there, just be very, very cautious with what you do here with WTI crude, just because those geopolitical market drivers can shake things up in a big, big way. Right there, 50%. I would be looking to sell probably 70.48. So that's a beautiful trade up there, great location. So if I'm looking to sell this thing, and that's pretty much what I want to do, 70.50. So 70.25 to 70.50, that's a pretty good resistance zone that you could sell. And then also up here at 78%, right around 71.53. That's another great sell as well. You'll notice that we've got that 13-week EMA. I love my 13 EMAs. That's my favorite. And that one's down there at maybe 71.19. If you got a chance to sell around 71s, you're probably going to do pretty well. But we're watching closely. I don't know that we get that high. For right now, I'm probably going to be in a holding pattern. Very tough market structure, a lot going on, rally in the USD, that's bearish for crude oil, but the geopolitical situation, long-range missiles inside of Russia, that has the potential to really blow the lid off of the Russia-Ukraine situation. All right, let me see. I got a question here. Coratim, hi, Shane. Can you have a look at Bitcoin? Yeah, let's go ahead and look at Bitcoin, and then we'll get on with the pendulum. Real nice price action strategy. There is no doubt, there's no question in my mind, and we're starting to talk a little bit more in final terms, meaning I'm putting some market calls out there that have some finality to it. And the reason why we can do that now is because the election's over and a lot of that uncertainty is gone. Now you got fresh uncertainty with Russia, Ukraine. Again, that's something we're just going to have to deal with as it comes up. But right now the election's over. This rally in Bitcoin, there's no question about you're going into a pro-Bitcoin, a pro-cryptocurrency type of administration. We pretty much know Gary Gensler is going to step down as the head of the SEC. We actually called that before it happened. He hasn't stepped down yet, but he pretty much looked like he was writing his farewell letter the other day. That was picked up by the news. And since then, it's just been a rocket ship, for Bitcoin. Now, the reason why Gensler stepping down is a big deal is because the SEC under Gary Gensler and under the Biden administration was very aggressive towards crypto. We'll pull an XRP chart here in a second. Now, they really went after crypto. Now we're talking about deregulation. And when we see deregulation, what does that mean for cryptocurrency? It means it goes through the moon to the moon. That the reason why you're seeing these bids, the reason why you're seeing crypto rally is the institutional traders that are running those physically backed Bitcoin ETFs. They're snatching up Bitcoin in a big way right now. Tons of volume, billions of dollars of volume coming into those ETFs. There's a lot going on with crypto. The Trump victory in the election is affecting so many things in the markets. But this Bitcoin, has definitely been the big winner. I'm not really going to, you want to buy pullbacks here, no question about it. But I like easy. I like simple. I believe in simple analysis, and I believe in just being a smart trader, understanding how big these key numbers can be and how important they are to the market. So you got 100,000 up there. It gets no easier than that. I'm bullish until we get to 100,000, no question. No question about it. And the reason why is that is just a flat-out breakout. You'll notice we're above that upper Bollinger Band, and we're treading higher. So let's go down to maybe a 4-hour chart and see if we can get a pullback here. I mean, if you wanted to draw really a great big, that is an ascending triangle if we've ever really seen one. Let me pull a triangle here, and I'll go ahead and see if we can draw the picture. But what you've got, it's an ascending triangle, guys. No question about it. I don't draw them very well, but you see exactly what's happened here. Your lower trend line, you could bring this trend line right up in there, something like that. Your upper trend line, you could bring down. Look at that. That's a big-time rally. We've got some sideways action, and then you've got a breakout, bullish breakout. So we put out a trade idea a while back. I was doing the analysis last week talking about buying 87.5s. Remember that? When we had sort of that real similar type of a formation, and we were saying 87.5, 87.5, 87.5. Nailed that one. We nailed that one. So the real question is, how high do we go? I want to be bullish. I want to be bullish until we get to 100,000. Does that mean buy the market right now? I mean, you can. You can. I think that if I was going to do something like that, though, probably, you got a nice 8-hour breakout. We're pushing all-time highs. It's dangerous buying up here because you can end up buying the top of the market, no question about it. But something like this, 30-minute chart, you could definitely buy pullbacks and probably get away with it. You just got to really be conservative with what you're expecting out of your top side. So we're trending, we're breaking out, we're going higher, 100,000. I'll be bullish till we get to 100,000. So I hope that works for you, Corton. All right, guys, we're going to go ahead and dive into our strategy tutorial today. Remember, if you need a broker, be sure to join Switch Markets. You go over there, check out the experts at Switch. They've got a product for you, and they're really they can help you. I would say they can help you learn to trade. They can get you up and running with a demo account. They can get you up and running with really anything you want to do in the market. So if you're in a municipality or a locale that is supported by switchmarkets.com, be sure to get over there and check them out. Pretty good broker, our partner broker. In any case, strategies. This is another strategy session. We did one yesterday as well. Remember, these strategies that we're putting out are designed to be a jumping off point for you. Now, the way that I trade the pendulum is not the way that Mario Singh does, but I'm going to sort of go through and we're going to look at some Forex pairs here, and we're going to give you the basic concepts of the pendulum on a 4-hour time frame. Okay, so strategies, you just go inside the trading room, you go to strategies and just go ahead and click on pendulum right there. And this was a video that we built last spring. Typically, if you're watching the videos out of order, you're going to get this signal right here. Just go ahead and click to move me to a new path, and you'll be able to watch the strategy video. And there it is. That's the video in itself. It's about 6 minutes long. I keep it short and sweet. Be sure to click on the Learning Resources page. That tab right there is going to have all your PDF downloads, everything that you need to get up and running with the pendulum. Right there is a strategy overview, a pendulum strategy trading guide, and then trade examples. And what we do is we visually break down exactly what we covered in the video. So right there's going to be your PDF, and there's a couple of ways that you need to look at the pendulum. There's a couple of things to remember before you dive in. Now, this strategy is simple. It's simple. I like simple. Easier is always better. It's almost always better. A lot of folks get so complex, and we've sort of been getting more complex with the crossovers and the RSI confirmation, all that. And we're doing that to try to give you guys a good idea of all the different ways you can trade and pick one that you like and go with it. So right here, your trading strategy, this is simple, guys. Identify a support level, which is a swing low. Identify a resistance level, which is a swing high, and then calculate the trading range, the difference between resistance and support. It's relatively simple. It's not hard to do at all. And I'm going to sort of give you a couple of quick tips on how to do pendulums here. All right, trade execution. When we're going to look to buy the market, we want to see our support levels identified. We want to see price go down, check out support, and then bounce 10%, and that's going to be our buy. Now, it's easy to identify our buys, our entry points and our profit targets. I'm going to give you a quick trip or a little quick tip on how to really automate the whole process. In any case, your profit target's going to be what on a buy? It's going to be at the 50% level and then also at the 90% level of that initial trading range. On a sell, it's exactly the opposite. You're looking for a test of resistance, a 10% pullback, and then you're going to sell it. You're going to sell it. Profit target's going to be down there right around 50% and 90%. Personally, I like the 50% level. I'll tell you more about that in a second. Now, your stop loss location. To me, stop loss is the number one thing on any trading strategy. If you're trading, you've got to know when you're wrong. So you pull the plug on the trade and you go on to the next one. Really, the only thing you can really control in the market, aside from taking your trades, is your stop loss. Only you can lose the money. And I don't mean that in a bad way, but you are responsible for managing your trades. And if you have a good rock solid stop loss location, you're ahead of the game. You're way ahead of the game. Now, I'm going to show you how to build them. Stop loss location is going to be a basic 1-to-1 ratio from the 50% mark of our range to our entry point. And I'm going to show you how to do that in just a second. So that's essentially all there is to it, the pendulum. Let's build a few. All right. Here we go. This is a good look at US dollar Swiss franc. I like this pair a lot for the pendulum, and the reason why is because a lot of times that dollar Swissy just sort of rotates. Now, what do we have going today? The Swiss franc sort of breaking out just a little bit, and you're going to have an interesting sort of pendulum trade that may go live right now. Now, we're using the 4-hour time frame, and the reason why we're using the 4-hour time frame is because it really gives us a good look at the 24-hour nature of the Forex markets. I like daily charts for Forex, and I like 4 hours. Now, you guys feel free to scalp on any time frame you want. This strategy is designed for your 4-hour chart. I use it on the daily as well. You can also use it on a 30-minute chart. We've done a lot of that in the past, especially with equities index futures. All right, so right here, what do we have? Basically, very, very simple. There's your resistance zone, which is your spike high, and there's your support zone. That's your spike low. This 8-hour range is what we're looking at trading right now. Now, a little quick tip on how to do this. You just click on your Fibonacci retracement tool, and all you have to do really is you can just input different levels into your Fibonacci. So if you're going to go here, you're going to go, let's just go right to our settings here. Something like this, okay, you're going to go to your settings in your Fibonacci, just go to your style, and just input the levels. You're going to go with a 0 level, a 10% level, a 50% level, a 90% level, and a 100% level. That's an easy way to manipulate the Fibonacci tool to give you an automatic and really an automated look at a pendulum. Now, this is relatively simple right here. What do we want to do? We've got our pendulum template already built. There's our spike high. That's our resistance level. And what do we got right there? There's our spike low, our swing low. And now we've got our pendulum trade built. Now, this right here is going to be our entry point. Now, if we go up and test out our resistance zone, we want to wait for a test of that area. Okay, that 42. Now, it's not going to be exact. We're at 80. Our high right there is 88.42. So I'm looking like an 88.40 maybe an 88.44, and then get that 10% pullback. And then we're going to be looking to sell probably 88.38s. That's 10% of our range. How big is our range? 88.42 to 88. 88 even, that's about a 42 pip range. Not bad. So we're going to look to make about half of that with our first profit target, and then our second profit target's at 88. I focus on the first profit target. The way that I look at it with a 1-to-1 ratio, anything over 50% means I'm a winning trader, and I'm looking to hit 60 or 70%. I want that 20% edge built into every one of my trades, and if you pick the right ranges using the strategy, you can really do it. Try a 4-hour chart. It can be a pretty good trade, a pretty good place to begin on the Forex. So where's our stop loss going to be? Stop loss is going to be a 1-to-1 ratio between our entry point, which is right there, 88.38, and 50%. So that area right there is what? 17 pips. 17 plus 88.38 is going to be 55. So right up there, that's going to be your stop loss, and that's relatively simple. There it is. Now, what's our entry rule going to be? What's our criteria? Okay, we're getting the test of our top side resistance level right now. So what we're looking for now, we've put that test in. If price pulls back 10%, we're going to short the market. Now, here's the beauty of this strategy. If it blows up in our face, meaning if price breaks above that 42 and keeps running, keeps rallying, then we just don't take the trade. We've got to get that pullback. That pullback is what qualifies our trade and keeps us out of getting swept up in a big-time market move. Right now, this thing's trending higher. If, in fact, it comes back to us, we're going to be able to trade it. If it doesn't, then we won't. So right now, you're going to have your orders. Your orders are going to be a sell order, and it's going to be probably a stop order, a sell stop, because it's going to be beneath price action. You're going to be looking at something like that, right around that 88.38 level, okay? And then what are you going to do here with your take profit and stop loss? Okay, you're not going to do that. Your stop loss is going to be 17 pips. 1-to-1 ratio. Our first take profit is going to be 17 pips as well. just like that. Sell, stop. Why can't it be a sell limit order? You can't put a limit order in there or you'll get filled right away. So you're going to go sell, stop. There's your sell, and that's your trade. That would be your pendulum trade. In this case, with our size, we're trading 500,000. You're looking to make about $950 on the reversion back down, and you're also looking to risk about that. Now, if market doesn't pull back, right now we're up around 88.44, 43, 44. I would say about 45 would be my threshold. I don't like being super exact because then you miss way too many trades. We've got to trade. If this setup develops, if we see that retracement go back down to 38 and get us in, then we're short the market. That's a pendulum trade. That's all there is to it. It's relatively simple. So let's go ahead and see if we can spot another one. Right now, we've got our order in the queue. If we see a pullback, then we'll get that short going. Euro, Great Britain, Pound. Now, this is another really a pair that is fantastic to trade the pendulum with. The reason why is the Euro, Great Britain, Pound very rarely trends. Now, when it does trend, it is typically a significant move. Typically, your market drivers are, monetary policy, the ECB, the BOE. That's what you're going to see. But a lot of times, that pound and euro, those just sort of rotate around, and we see good sideways movement. That gives us a great opportunity to have some success here with a strategy like the pendulum. We're trying to trade flat markets. Remember, markets trend only about 30% of the time. The pendulum can help you trade the other 70%. Now, what do we want to do here? It's the same basic motif. It really is the same basic game plan. You're going to get your little pendulum tool there, top side right there, top side resistance, bottom side support. So if in this case, this is a pretty good formation. I like it, 4-hour chart. If you do see a sell-off down there right around that 80, 83.31 area, something like that, get a test there, get a check, and then a test, and then you're looking to buy right there at 83.36. Your profit target's there at 83.54, and then what do you have there? 83.36 and 54 is about 18 pips. That 18 pips is going to be your stop loss. You're going to be down there at about, 18? 108.18, something like that. Relatively easily. Now, what makes this strategy good and what can make you take your performance to the next level with it is understanding the basic fundamentals of the market. Now, we know that price typically breaks and moves on big news. So right now, is there really anything coming out that's going to impact this pair, this Euro Great Britain Pound? Not a whole lot. Not a whole lot. So Tuesday session, we're going to get some good sideways price action. We're going to have an opportunity to trade this probably in the coming hours. I'll be watching this closely. I would be surprised if we break and run without at least getting an opportunity to go in there and take a few pips off this traditionally a flatlining pair. It's just traditionally this thing flatlines. All right, everybody, that's a good look at the pendulum. Let's go ahead and see this Swissy. This may come into play. I'm going to monitor this the rest of the day. And this Euro Great Britain Pound, this is also another setup that I'll keep on my front burner. All right, there's one other thing that we need to look at here, and it's going to be, we've already sort of gone over gold, but I do want to cover natural gas right now. Now, remember, natural gas going into the winter months, it's already cold here. Consumption rises in the northern hemisphere, and typically you see a lot more demand for natural gas. That drives prices higher, okay? As the prices sort of get their legs, what I call the sea legs, you can see a big breakout this time of year in natural gas. You factor in the long-range missiles being used by the Ukraine into Russia, and then the nuclear proliferation. There really is no limit to how high natural gas can go. Now, what I'm trying to say is, be very careful shorting this market. Now, it's been short. Realistically, you can see really since the onset of the Russia-Ukraine war, you've really had a bear market here in natural gas. We had that massive spike up around 10. It's not an accident that your high is right up there at 99.58. Sellers came in, protected 10, and then you got a big-time sell-off. Since then, we've just sort of wandered around in the woods. We haven't really made a directional move. We've been a little bit bearish down here, but we haven't made a big recovery. So for me, I'm watching this relatively closely thinking, when's the breakout going to come, and where is it going to come? Now, this area right here is one that I'm hyper-focused on, and I think a lot of people are as well. I'm in the natural gas market. That's a gap. That area right there, that was the end of business in 2022. And that was the beginning of business in 2023. So right there, that low is right around 444, right around 445, somewhere in there. And then that high right there is about at 440. This is a gap. Gaps get filled, gaps get filled, gaps get filled. I think that's going to be a legitimate topside target for natural gas over the next 6 weeks. I'm watching the upside of this market very, very closely. You could get a big bullish pop here anytime. And right now, you're seeing this sort of give back just a little bit on the day, but still a relatively strong showing. Let's go to a 30-minute chart here, and we'll go ahead and sign off. But you can see right here, that's a major crash. 30-minute chart. Look at that. You're off about 240, 245 right now. That's a big time move. That's right on cue. I think you're probably going to be in a situation where you can buy a decent pullback here on gas. Let's go ahead and look at the weekly. A lot going on right here. That's all election stuff in natural gas. There's your spike low. There's your spike high. Do I want to be long or short natural gas? I want to be long if possible. And I've got to go ahead and redo my Fibonacci's here. It's the one thing about building these templates. You do have to remember to rework them. There you go. I think a golden zone buy on the weekly time frame is a pretty good play. You'll see all these orders right in here. A lot of chop, what I call chop. Not a bad demand zone right there, 62%, right around 283. I think if you can get that, you're going to be in pretty good shape. You may get it today. I mean, we already gave back all of our gains in natural gas just in the last few minutes. So watch the news cycle. Be ready for anything if you trade these commodities. Trade Linko, good to see you, Trade. All right, everybody, I'm going to go ahead and sign off for now. I'm watching these pendulum trades closely. The Euro USD is definitely in play. If you want to trade Bitcoin, the top side is going to be the way to do that. I mean, take a look at that break on Bitcoin just over the last 30 minutes. That's about a % move. You went right there from an open of 92.9 all the way up to 93. I mean, this is just an explosive market, Let's go right here. This trade's setting up. The Swissy trade's setting up. So remember, if you go down to 88.38, that's your entry to the sell. And then our Euro Great Britain pound, that one's going to roam around. I don't expect to get that one until the London session. All right, everybody, I want to thank you for joining me today. If you have any questions at all, be sure to swing by the How to Trade trading room and ask. Always a pleasure doing these live streams. We'll be back tomorrow. Connor's going to be up here in about, 13 hours, 29 minutes with a live trading Q&A. Bring all your questions. He'll be sure to answer them. And then we're going to do a midweek market scan. I'm watching this Russia-Ukraine situation very closely. Commodities are going to be in play. They're going to be in play. I'm watching equities. Equities, the Dow's off about 100, but sort of a flatlining day for U.S. equities. So definitely want to pay attention to the news cycle, guys. Pay attention to the news. All right, everybody. Mark Corp, good to see you. Dibble, you guys have a fantastic session. Trade the action well, and we'll talk soon. See you.